Hi everyone, welcome back to VRich. Yes, yesterday I spoke about IndusInd Bank. I spoke about the MFIs, the microfinance sector, and we had a long discussion about it. But it seems to be that there's a price movement which we saw today in IndusInd Bank. If you want to call it a price movement, and a lot of you in our community were starting to worry, starting to panic. I wanted to talk about IndusInd Bank, lay out my case for IndusInd Bank, and then at the end of the video, you can make up your mind if IndusInd Bank is something you should worry about, or you should avoid, or if at all you should look at it in different coffee ranges. Because end of the day, even if you're excited about it, I want you to only keep it in different coffee ranges. Like some of you today who are very smart in the way you went about investing in IndusInd Bank. You bought one, and then you saw another correction and you bought another one. And then you saw a third correction, you just bought one more, and that's it. And you were done for the day. That's great. Or if you were like me and you invested in the first dip and then you saw a second dip, third dip, I did not again go wet my beak, as they say, in the second dip and third dip. Because tomorrow is another day. It will present itself in other opportunities. If you're looking at the time horizon of many months and many years, this is just an opportunity. It is not a short-term play which we're doing. And the reasons why is because IndusInd Bank, the question which everyone's asking is it a bank which we should be looking at? Is it a buying opportunity? One, which it's got going for it is cheap. It isn't, but other than cheap, it also has strong historical growth. If you look at IndusInd Bank for a long period of time, it has been a good, strong, growing bank, which is a big positive. What is a big negative, which has got us all worried is there's high amount of uncertainty in it, which I want to dive into in this video and walk us through. Maybe by end of the video, you'll get some more points to understand what to do with this high uncertainty. What has happened? Well, what has happened is it has dropped its net worth by 1,577 crores in the fourth quarter. And this is due to some discrepancies in its derivative transactions over the past 5 to 7 years. Now they're going to call in an external agency to come and see through their books and see what went wrong, how it went wrong. But this is where it stands. What are derivatives? Derivatives are side bets banks take. They're the future and options which we've been talking about and why we should avoid them. So if future and options are so terrible, why are banks doing it could be the next question. Well, banks can do this for a certain number of reasons, which are not all bad. First, risk management. It's called hedging. Because to protect themselves against interest rate cycles, currency fluctuations, loan defaults like in our microfinance, banks need to make sure they make money somewhere else. So it offsets this. So it's called risk management. And if it's used in risk management, it's kind of doing side bets. Second, speculation. This is what we should not do for, which is profit seeking, to make money off the market. A lot of people do this. Banks also do this. But good banks try and not do too much of this. Third is arbitrage, exploiting small differences in the market. For example, if let's say you're a big international bank, you see gold is being cheap in one country and it's being expensive in another country. You can see that small price difference arbitrage and you can make a profit. Especially when your transactions involve millions of dollars, you can really make a lot of percentage in terms of profit. Fourth is having customized, highly complicated financial products is important for banks because that's how you attract high net worth individuals and big corporates and hedge funds come and do business with you because you have these product offerings, these derivative offerings. So these are the reasons why they do it. Is it risky? Yes, it is very, very risky. If it's not managed well, it can be tremendously risky. And we saw it in a 2008 financial crisis where the banks in US, the private banks were sitting and playing around too much, and that led to almost the world economy collapsing. But then the American government stepped in and the other governments stepped in, the federal banks and the reserve banks and the financial institutions stepped in and they supported and they propped up the world economy and we got through it. It was very painful, but we got through it. But if it's managed well, it is not very risky. It can help improve the stability of a bank. What is the problem with this is basically all bankers are also human and humans tend to become greedy. And when we get greedy, we tend to make mistakes. So this is what the problem with derivatives are. So this is where the IndusInd Bank through the course of the investigation, we'll find out more details about this. In their derivatives, someone seems to have incurred a loss to the bank of the tune of 1,500 odd crores. So this has led to issues with the leadership, and RBI has questions about the leadership, and that's why, though they asked for a 3-year extension in its tenure, RBI has cut it short and said 1 year is more than plenty, and has advised the bank to find the next succession in the CEO. There has been questions being asked about this, and this has also led to further uncertainty and speculation in the market. So what does RBI want to do? It wants to dilute the leadership, and maybe even someone from a public sector bank could become the CEO. Don't know. We'll have to wait and watch to see what happens. So now let's get into the valuations of the bank and the stock. The stock is 40% down over the last year or so, and the price to book earnings now is at 0.8, 0.7. This is the new price to book. If you take into account of this 1,500 crore net worth being wiped off, the new price to book comes around to close to around 800, where it was before around 840. Now it's coming down to around 810, 817. I would say around 800. So valuation alone we can't look at. We have to look at other things, of course, the management, the leadership. Uncertainty is of concern, so we have to keep an eye on that. Earnings is something you have to keep an eye on, because the NPAs, like I said, has brought the profit down by 26%, and the loan book of the bank still has high exposure to high risk segments, such as 40% of it is still sitting in vehicle finance, microfinance, and credit cards and personal loans. That is of concern. Of course, what I spoke about yesterday, the whole microfinance sector has tailwind. We have to see what happens with that. So who can help with this bank in the scenario? Of course, the promoters. And the IndusInd Bank has a very famous group that is the promoter, the Hinduja group. They're the promoters. Are they going to support the bank? Are they going to help the bank? Is a question. Because if the bank is having such issues, them being who they are, they can, of course, look at supporting the bank. So what are they saying? It's the next question. Well, they recently got an RBI approval where their stake has gone up from 16% to 26%. That shows more commitment from them. They're more invested in this bank, right? So as a promoter, that should give you some kind of assurance as an investor. 2, long-term growth plans they have. They plan to take their investments from $17 billion to $50 billion by 2030 through their various investment methods in IndusInd Bank. 3rd, they have an aggressive expansion plan for financial services for IndusInd Bank. And that's why they've bought Reliance Capital through corporate insolvency, which also has made the news. So you can Google that and read about that too. So why would they buy Reliance Capital through corporate insolvency? That is something for you to think about. So what does this mean? So what is the long and short of it, you may be thinking? Well, as a deep value investor, if you're willing to take long-term bet, in the short term, there'll be a lot of pain, but there's an opportunity in the long term for gain. In the past, the stock has dipped like this. It dipped once approximately to 300 rupee range, where the price to book was also at 0.7, 0.6. Like I've said many times with Anand and alone also, when we say a mean is 1.6, 1.2 price to book, that means the stock has to trade considerably below that and considerably be above that for it to be considered the mean. This is even true for big banks. Let's say, for example, HDFC is price to book mean is at 3 or 2. That means for a long time it's been above that, and equally amount a long time it's been below that. So keep this in mind when you see these things as the mean price to book. So it has happened in the past where it went down to 300. That was an opportunity. Of course, you wouldn't have been there at that time, but now that you are, you have to consider this. Is this an opportunity? So what should you do before you decide to wet your beak, as they say? Well, what you should pay attention to is the next few quarters. You should pay attention to its earnings, specifically its NPA. What is the NPA doing? Is it stabilized? Is something you need to pay attention to. Next thing is the leadership. Who's going to be, this person is only going to be there for the next 1 year, as RBI has mandated. So who's going to be the next CEO, and what is his or her vision going to be is something we have to pay attention to in the short term. So do these two things and you should be finding more conviction and more patience in your investment in IndusInd Bank if you have made investments. If you have not made investments, I can also understand why it is giving you a sense of fear. If you do find a sense of fear watching such price movements in a single day, then stock markets is not for you. I would strongly advise you not to invest in the stock market and find other ways to create wealth. There are other ways to create wealth. Stock market is not the only way to create wealth. It is the way I'm creating wealth, my brother is creating wealth, and a lot of other people are creating wealth. If stock market tends to give you a lot of anxiety and tends to create a lot of fear in you, and you feel very insecure about your small capital being invested in this, please avoid and find other ways to invest. One of the great ways to invest is also even looking at gold, which is a very safe investment if you're looking for something which is a lot less in terms of risk. This is what I had to say about IndusInd Bank. Did I buy IndusInd Bank today? Yes, I bought IndusInd Bank. Will I buy IndusInd Bank tomorrow? Yes, I'll probably buy IndusInd Bank tomorrow. But like I said, I would like my portfolio to be equally diverse. So even if I see an opportunity in IndusInd Bank, I would also like to keep my portfolio diverse. I would not like to put all my eggs in one basket, as they say. So I will look at the market tomorrow and I'll make a judgment call on what I'd like to do. So if you'd like to know what I'm doing, join me on Instagram or WhatsApp, where my channels are, where I do share what I'm doing, and I encourage you to invest in different coffee ranges. Even today, when I saw the market violently lowering in IndusInd Bank, I kept saying, please stay in different coffee ranges. If you're done for the day, please move on and do not waste any more time looking at the share price of IndusInd Bank or anything else in the market. Because when you do find deep corrections in the market, you can get swayed very easily and get carried away in a vicious loop, either with exuberance, that means you feel very overconfident and you keep dropping more and more money into it when you can't afford to, because you need to pay other bills. We have power bills to pay, we have rents to pay, we have EMIs to pay. You don't want to take all that money and throw it into the market. So please restrain yourself. Or you get suddenly very scared and you start, selling. Today morning you bought and then you see correction and then you do not know what to do and you start selling everything thinking you're in some kind of a situation where you're going to lose all your money. This thing can happen. So that is why even seasoned investors try and stay away from the market news and market cycles. I stay in it because this is what I do for a living. And me and my brother tend to follow this on a minute, hourly, and daily, weekly, monthly basis. So we can understand, so we can share this information with you. So to help you understand this better. But if this is not your profession and this is not something you do full time, please stay away from market news and market cycles. Do go enjoy your day. You do have a life to live. This is not your life, watching distant stock prices going up and down. Thanks for watching the video today. I hope you found it informative and entertaining as always. I'm still in Bangalore. I'll probably be in Bangalore till the end of the week. So you'll find these recordings remotely done and being shared with you. Thank you again for watching Viraj. I hope you had a wonderful day. See you again tomorrow with some more news. Bye.